Good morning. Welcome to Dornbush download number 163. Good morning, Rod. How are things there this morning?
Good, thanks. Yep, very good.
Mate, you've been burning the candle at both ends, up early doing the radio for the first half of this week.
That's right. It's all happening.
Mate, never a dull moment. Absolutely, mate. I know you've been watching a couple of stocks, Rod, in that agricultural space, which have shot a few lights out, I suppose, in the last few days.
Yeah, sure. It's just winded back a bit, especially the last couple of days have been pretty tough on the markets. Like the ASX 200 shot through the 6,000 point barrier last Tuesday because pretty much the majority of our gains this year have happened in the last four to 5 weeks or so.
Yeah,
so we've had a good run. Shot through the 6,000 points last Tuesday, but then came back with a crashing halt yesterday. We went down about 1% on the market yesterday. So. But a couple of shiny lights over the last couple of days have been the agricultural companies. Elders came out and announced their profit on Monday, and the profit was up 40%, up to $57 million. And it's the first time they've announced a dividend since 2008. So you go back to 2008, the GFC period, and this is the first time they've announced a dividend of 7.5 cents, and a special dividend as well of another 7.5 cents. So I suppose they're rewarding loyalty for their shareholders and repaying their loyalty, which was all good to see.
Yeah, they've been a tough company to hold for long time holders because I remember a few years ago they were really struggling. They had to sell off Rural Bank and a few other bits and pieces. They consolidated the share base as well. But really since then they've managed to have almost a Lazarus-like comeback.
That's right.
But it's good to see long-term holders actually now starting to see a little bit of dough, I guess, via a dividend coming back their way.
Yeah, sure. Like in more recent times, a lot of their success has been due to commodity prices, like cattle and sheep prices are very buoyant at the moment. And you've got because the cattle and sheep prices are very good, it increases rural property prices. So their real estate arm has been buying and selling properties and doing well. Their financial side's been going well. So the sign of the times for the agricultural sector has helped Elders a lot. Yeah. There's no doubt about that. Their share price is hovering around the $6 mark at the moment. That's up about 15% compared to last week. So it's been a shining light for the last few days. The other one I'll talk about too is Incitec Pivot. They announced the profit as well. Their profit's up 190 million to 318 million. So that was a good result for them. Their share price shot up 5% yesterday. And they're hovering around the $3.95, just under the $4 mark at the moment. So once again, commodity prices have helped them. Fertiliser prices have increased, which has helped their bottom line, increase sales. And they've also got an explosives division that's been trading, especially their overseas section of that has been trading very well and profitably as well. So that's helped their share price shoot up as well.
Yeah. I know that certainly from past experience, that explosive division tends to sort of have a pretty strong correlation to the mining sector, of course. Obviously they use a lot of bombs and stuff to bust open these big mines. So, of course, Incitec Pivot, benefiting from that. But both, I guess, the agricultural side and also a bit of an uplift in the mining sector as well, which has been good. I've got a little bit to talk about on private health insurance. There was a report basically from APRA, the Australian Prudential and Regulation Authority, brought out a couple of days ago just about some statistics around private health cover. And I know we've had a chat about this, Rod, in the past, and no surprise to see that take-up of private health cover is actually falling. So less than 46% of the population out there now have private hospital cover. It was a touch over 46%, but it's now dropped below that rate.
Yeah, it's just been it's an expense issue for your general households. Household budgets become tight, and that's one of the things to go.
Yeah, absolutely. And funny you mention that, particularly in the under 35s area. The younger people are the ones now that are that are tending to sort of drop private health cover off the radar. So for those that own Medibank Private now, Medibank Private's been quite a successful business since it listed. There's also another private health insurer that's listed on the market, NIB Holdings, trades under NHF, I think, from memory. Might be worth just taking a little bit of profit out on those guys. Coincidentally, albeit this report suggests that policy take-up is reducing, that's sort of been counterbalanced to some degree that the fact that there are less claims being paid out on hospital cover. So both Medibank and NIB have had a pretty good rally up, but certainly Medibank Private trading at about 20 times earnings at the moment. Profit growth over the next 12 months only expected to be around about 4%. Probably looking a little bit expensive at 325, 330 I think they are at the moment. So have a chat to your advisor, they might be worth skimming a bit of cream off the top of those. But yes, again, some interesting stats there, and just going to show that I guess the nature of spending. I know for guys like us with sort of younger families, it's probably one of the last things we'd drop off the list. But again,
you've got the youngest smashed avocado generation coming through. They'd rather eat their smashed avocado than health insurance. Is that what you're saying, Michael?
Oh, mate, you've read my mind. Unbelievable. But yeah, exactly right. Priorities have changed, haven't they? And this is it. Perhaps the Generation X's like ourselves are now sort of being quarantined into the boring list. But ultimately, things are tough out there for young people. Housing prices, all the rest. We've spoken about it numerous times before. But of course, yeah, people have just got different priorities now. So, but all in all, yeah, markets have enjoyed a really good October month, as you say, Rod. Yeah, last week or so, we just started to give away those gains. The 6,000 point mark was always going to be a tricky one to sort of stay consolidated above, we've dropped back. Well, the ASX 200 certainly is back under that, so it'll be interesting to see if we can sort of test that again over the next week.
Well, part of the reason for the pullback of the last couple of days, there's been a few issues. Like you've got the citizenship dramas in Parliament at the moment, so which just creates uncertainty. Like who's going to be there tomorrow and next week and whatever, and so whether the government's still going to have a majority and things like that. So it just creates a bit of uncertainty. Some stats came out of the Chinese economy as well, which quite didn't meet expectation or forecast yesterday. Just their sales were down a bit. Their production levels didn't quite meet forecast, so they're just a bit softer than predicted. And also, like ANZ and Westpac went ex-dividend on Monday as well. Yeah. So that's just a automatic impact on the markets as well. Yeah,
it's a good point, isn't it? Because it's amazing how much of an impact those big banks have on indices when they do go ex-dividend. I guess a little bit of light at the end of the tunnel, Rod. And again, I know you mentioned it there this morning that business conditions have actually been the best that they've been, I think, since record started, 20 years or something like that.
Yeah, the NAB put out their monthly business survey yesterday, and the business conditions are at their best for 2 decades. They started doing the survey in 97, so they've been doing this survey for 2 decades, and this is the best it's been. So, which is great. What the way they survey that is they look at profitability, sales, staff hiring and firing and the like. So it's the best conditions, but they did also say that the business confidence didn't quite live up to that same level as the actual conditions. So the actual confidence levels just lagging a bit behind. So, but it is good news. It's like the business conditions, like it all goes well for future.
Yeah, absolutely. And I think, mate, again, you bring up a good point in that confidence is down because there's a big part of it would be just the amount of political instability that we have out there at the moment. It's an absolute dog's breakfast at federal and state level, and until they can sort of get some sort of direction either way,
get their act together.
Yeah, it's difficult for business to make decisions because the goalpost can change very easily and very quickly. But
with that business survey as well, they were talking about business conditions are very good, but just the retail sector, like we've spoken about before, is still very soft. Like JB Hi-Fi was off nearly 3% yesterday, and they're just talking about the uncertainty of when Amazon's actually going to start operating in Australia. So, and some pundits are saying, well, it might be before Christmas, and that's a bit of a worry for your JB Hi-Fis, your Harvey Normans, and companies like that. So
yeah, it's going to be a real test, isn't it, when the big the big American player comes in? But we will no doubt wait and see. But mate, I think that's about us for today.
that's about it from me.
Yeah, thanks very much for watching.
Thank you.